You've probably heard people say an offset or revolving account can save you heaps of interest on your mortgage. But let's be honest, after hearing a few times, does that still feel complicated? Today, I'm going to break down offset and revolving account and explain which one might be better fit for you. Hi, I'm Connie from Prosperity Finance. First, let's talk about revolving. A revolving credit account is kind of like a supersized credit card. Most of us have a credit card with a few $1,000s limit, but with a revolving account, that limit could be tens of thousands or even more. You only pay interest on the amount that you're actually using. When you put extra cash in, the interest drops straight away. And if you need that money again later, you can take it out anytime. Here's a simple example. Let's say you've got 100,000 revolving facility. On property settlement day, you use the whole 100K. A year later, you manage to save 20K. You drop that 20K into revolving account, and now you only pay interest on the 80K. But that 20K isn't locked away. You can still draw it out whenever you need it. That's the beauty of a revolving credit. Flexible, instant, and interest is calculated daily on whatever the balance you owe. Now, what about an offset account? An offset account has the same goal, saving interest, but they work a bit differently. Let's say your parents have some savings. They open a saving account with a local branch of your bank, and they deposit their money into that account, which stay in their name. They don't mind giving up the small amount interest on that money because they want to help you. After all, their saving might only earn 3% before tax, while your home loan interest might be around 5%. The bank then link their saving accounts to your offset home loan accounts. That means you don't pay interest on the portion of your loan equal to what your parents hold in their saving accounts. They can still add or draw money whenever they need it, and your home loan interest will automatically adjust. When the offset is fully covered, you pay no interest at all on that part of your home loan. But if your parents take some money out, you simply start paying interest on the difference again. It's pretty clever, almost like a magic really. The money stays safe in their name, and you still save thousands in interest every year. So the key difference is revolving is one account, money in and out, offset multiple accounts that reduce your interest. So when should you use offset then? You only need to remember two situations. First, when the saving you want to use are not all yours. For example, money belong to your parents or your kids, or funds that set aside for another purpose later, for example, for holiday. You don't want to mix those into your home loan accounts, so offset is better. Second, when the loan you are offsetting is for an investment property or business purpose. If the funds get moved out, the interest portion can still be tax deductible. In most other cases though, a revolving account is more than enough. It's simpler, more flexible, and available with nearly every bank. We recently had a client who had about 300K cash sitting in their bank accounts. His plan was to use it as a deposit and borrow 700K to buy $1 million investment property. When he came to us, we suggested a smarter way. Instead of using that 300K as a deposit, we advised him to move 300K from his family home loan into a revolving facility, and then put his 300K cash into that account, reducing the interest on his home loan first. After that, he could borrow the full $1 million for the investment property. Now here's the magic. That 300K, which used to be non-deductible debt on their family home, now became tax-deductible investment home loan. At 4.5% interest rates, that's about 14,000 additional deductible interest. And with a 30% personal tax rates, he's saving roughly $5,460 in tax every single year. He was thrilled and literally said, if you hadn't pointed out that, I never would have thought about it. And that's exactly what an experienced mortgage advisor will do for their customer. Not just helping you get a loan approval, but helping you structure in a smarter way so that you can save more. If you've got some cash sitting around that's not being used, and you are wondering whether you should park it in the offset or revolving, feel free to get in touch with us. We are more than happy to provide you with a tailored, practical advice for your situation. Thanks for watching, and I'll see you in the next one. Bye-bye.